Okay, good morning, everyone. Looking at the US stock markets, the Dow continued to creep higher following the breakout pullback and continuation pattern above the 21,500 points level. Since then, the Dow has breached above the 22,000 psychological level as well as the 23,000 psychological level. And recently, the Dow has once again closed at an all-time high level of around the 23,557 points yesterday. Uh, Gains were mainly spurred by the tax reformation planned by Donald Trump. However, earlier on we did see that Dow has seen some of the strong gains. There's a lot of like white candles with long body, but recently some of the dodgy candles are being formed, implying that the uncertainty is forming for the Dow Jones index over the past 2 to 3 weeks trading period, implying that after a very strong run from the 21,500 points towards the 23,500 points, which is a 2,000 points gain. Any pullback for now for the Dow Jones Index will be a healthy one towards the 23,000 psychological level before the next up run to resume for on the Dow Jones Index. With the corporate earnings season coming to an end, there'll be less there were less things that can drive the Dow Jones index higher over the next couple of days or couple of weeks. Similarly, on the S&P 500, we did see the S&P 500 has recovered from the recent low of 2420 level. Since then, the S&P 500 continues to trend higher towards the 2580 points and staged some of the mild pullback just towards the EMA 20 level and rebounded strongly again. So moving forward, any pullback for now on the S&P 500 towards the 2550 will be a healthy one before the next up run to resume towards its immediate resistance of 2600 psychological level. Some updates on the crude oil prices. It has earlier recovered from the 49 US dollars barrel level after rejecting the 52, and since then, after reaching above the 52 US dollars barrel mark, the crude prices continues to ascend higher towards the recent peak of around the 57, 58 US dollars barrel level. And after touching just the 57, we did see some of the just a mild profit-taking activities on overnight itself by about 0.3%. So for now, any pullback after following these two long white candles, any pullback for now will be a healthy one towards the 55 before the next up run to resume on the crude prices. All in all, crude prices is making some of the good higher high and also the higher low formation over the mid to long term trading period. Okay, some of this on the local front. The FMKLCI has again rejected the 1790 level. Since then, the key index has pulled back just towards the above the 1730 level and staged out of the mild recovery. It rejected the EMA 20 level or the 1750 level. It staged a pullback, and once again on yesterday itself, we did see the FMKLCI has closed above the EMA 20 and also subsequently closed above the 1750 level as well. So this could be the short-term double-shaped formation breakout that we're anticipating for the FMKLCI to see a further recovery towards the 1760 level to see how it holds there. If the 1760 level were to be breached, then we might see further upside for the key index for the key index towards the 1790 level. So the 1760 level will be monitored very closely for now. But in the event that the 1760 level will be rejected and the FMKLCI stage of pullback from that point onwards, then we could anticipate for the key index to trend back towards the 1730 level. But on the short-term wise, we did see the MACD indicator has been slowly creeping higher throughout this period, and whereas the RSI has already risen above the 50 level, implying that some of the recovery could be in play on the key index. But it's a different story on the broader market or the FM small cap index. The FM small cap index has again recovered from the 16,860 points level. Since then, it has breached above the 17,100 and also the 17,370 points. After breaching above the 17,370 points, we did see the consolidation coming back in for the FM small cap index with some of the bearish candles being formed. And on yesterday itself, we did see the bearish engulfing candle was being formed on the FM small cap index, implying that the weakness on the lower liners could kick in over the short-term period, that we're seeing the FM small cap to retrace back towards the 17,100 points to see how it holds there first. If the 17,100 points can be held, then we might see further recovery for the FM small cap index towards the 17,550 points level. Some of the stocks that we can watch out for, one of it will be Vision. Vision has hit the recent peak of around the 2.59 cents level. Since then, price has pulled back without significant volumes during the pullback phase. The EMA 60 level, forming some of the hammer candles and form some of the good recovery pattern. And during this recent phase of recovery, we did see that Vision has experienced a breakout pullback and continuation, or you can say that this is a short-term flat formation breakout on Vision above the 2.55 cents. Following this breakout above the 2.55 cents, we could trade Vision towards the first target price of 2.70 cents, or even towards the 2.85 cents level, with your cut loss point located below the recent low, which is currently located at the 2.50 cents for Vision. Following this breakout pullback and continuation pattern above the EMA 9 level, we did see the MACD histogram has already turned green, whereas the RSI continues to maintain its position above the 50 level. On the short-term wise, we did see the Vision has been making of higher high and also the higher low of formation, implying that the recovery is intact right now, given that the during this period of time, the uptrend in orientation was also re-established again. The EMA 9, 20, 60, and 120 has been in line. For DNO, price has staged a good recovery pattern forming towards the high of 71 cents level. After hitting an intraday high of 71 cents, price has formed a shooting star candle and subsequently pulled back. And during the pullback phase, we did not see much of the high selling pressure, implying that the buyers during this period of time is still in position on DNO. After the mild retracement towards the EMA 20 level, the DNO has formed a good bullish engulfing candle and subsequently staged a short-term consolidation between the 64.5 cents towards the 66.5 cents level. So following this consolidation, we did note that during this period of time, if we zoom in closely, the recovery in volumes has been seen over the past 1 week trading period as well. So following that, we're going to monitor for this trend line breakout above the 66 cents level. Upon the breakout of 66 cents trend line breakout, we could trade DNO towards the 71 cents or even towards the recent high of 73.5 cents level, with your stop loss point located below the 62.5 cents for DNO. For FFHB, price has been on a pullback phase towards the recent low of around the 52 cents level. After hitting the 52 cents, which has formed a dodgy candle on top of the 52 cents, price has slowly crept up just towards the EMA 120 level. Earlier it has rejected once the EMA 20, twice, and the third time. But recently we did see that FFHB has once again retested the EMA 20 level, accompanied by some of the mild improvement in volumes. The MACD histogram has already turned green, whereas the RSI has hooked up above the 50 level. So following these positive indicators, we will monitor for the price action for the breakout above the 69.5 cents, and upon the breakout of 69.5 cents, we can trade FFHB towards the 76 cents or even towards the 79.5 cents level, with your stop loss point if there's a breakout above the 69.5 cents located at the 65.5 cents for FFHB. For Maxter, price has experienced a very good run towards the 65 cents level following this breakout above the 27 cents. Price continues to make the good higher high and also the higher low formation throughout this period of time. After hitting the 65 cents level, price has pulled back just towards the near the EMA 60 level, forming a good hammer candle on top of the 49.5 cents level. After the hammer candle, we did see a good recovery pattern on Maxter as price staged a mild gap up and retested the EMA 20 level. So this could be the wave of rally, a pullback, and the potential continuation pattern for Maxter to retest the 65 cents level, given that there's no bearish divergence inside. So following the breakout of 65 cents, further upside will be seen for Maxter towards the 70 cents level. So the first target price is 65 cents towards the 70 cents, and your stop loss point located below the 49.5 cents for our Maxter. Following the hammer candle and the recovery pattern, we did see that the MACD histogram has already turned green, whereas the RSI could be hooking up above the 50 level once we can see that there's a short-term trend line breakout on Maxter itself. Last two company for today will be your GHL system. GHL system has again hit the recent peak of around the 1.80 cents level. Since then, price has pulled back just towards the 1.41 cents. After the recent pullback around the 1.41 cents, we did see GHL system has formed a good recovery pattern. Price has once again staged a 2-day pullback just towards the EMA 20 level and formed a good bullish engulfing candle yesterday after price has closed above the EMA 20 and so the EMA 60 level. So this could be the short-term breakout pullback and the continuation pattern that we are anticipating for GHL system to retest the 1.80 cents or even towards the 1.87 cents level. So if price were to be supported above this level, which is located at the 1.53 cents, price could be forming a good higher low formation, implying that this could be the next wave of the rally for GHL system. So last company for today will be MHB. MHB has again hit the recent peak of around this 85 cents level. After touching just the 85 cents level, price has pulled back just towards the low of around the 71.5 cents. After the hitting the 71.5 cents, price has once again recovered, forming the flag formation, or this could be a T+4 formation breakout on top of the EMA 9 level. We did see a T+4 formation recovery pattern, and yesterday we did see the confirmation come in as there's the follow-through buy interest kick in on MHB, with price rising above the 85 cents resistance level as well. So following this sharp rally on yesterday for MHB with some of the high volumes, any pullback for now will be a healthy one for MHB for us to accumulate before the next uptrend to resume towards the next target price of 91 cents or even towards the 95.5 cents level, with your stop loss point located below the recent low, which is currently located at the 77.5 cents level for MHB. On the short-term wise, we did see the uptrend formation was also established. The MA 920 60 is in line. So the further recovery above the 91 cents and 95.5 cents will see the uptrend intact formation to be re-established again. So if you have any questions, you can put in the chat box and I'll reply you shortly. AirAsia has again hit the double top formation on top of the 3.59 cents level. After double top formation, we did see AirAsia has pulled back just towards the low of 3.14 cents level. Price has, after hitting the 3.14 cents, price has staged a recovery pattern, but there's no follow through in buying interest towards the 3.59 cents. Instead, AirAsia has pulled back, and yesterday it formed a very bearish candle accompanied by some of the high volumes being traded. So for AirAsia, if you're holding on to this counter, you have to monitor the 3.14 cents level very closely. If the 3.14 cents level cannot hold, then we might see further pullback or further corrective phase for AirAsia towards the 2.90 cents or even towards the 2.77 cents level. While any gains for now will be just taken as a mild technical recovery for us to sell into strength towards the 3.48 cents level. So any recovery for now, we have to straight away cut loss or take a quick profit. I suspect the recent pullback is mainly due to the very strong recovery in crude oil prices, which could impact their next couple of quarters earnings. With the crude oil prices rising very sharply, this could be quite negative for AirAsia. If there's no further question, then we'll end the morning briefing for today. Thank you.